I will pass it on back to Paul and Sam, talk about their perspective on the future of digital payments. Paul?
So hello, everybody. I just wanted to talk about where payments are going and how that might influence on the modular community. And we've only got 20 minutes, so I'm going to press on if I can. Before we go into it, I'd like to stress that I think the only people in the world who wake up every morning excited to try a new way of paying for things are payments consultants, and I'm one of them. So as a consequence, I have a multitude of accounts, but very few of which I actually use. But like most people, I have a handful of accounts which are actually active with specific purposes tied to each account. The lack of interest amongst what we call normals is understandable. After all, payments are just an enabler that let me acquire items or services that I need, a necessary step that I can't avoid. Payments process has historically been very cumbersome, so much so that the exchange of cash, making change, dealing with a lack of change, and so on, all came together to make the payment the actual prominent part of the transaction, eclipsing the exchange of the purchased goods, which is what I actually went into the shop for. And this was before the time of COVID, when a banknote became a vehicle for virus exchange as well as value exchange. When considering developments in payments, it's common amongst payments professionals to consider specific use cases, such as making a purchase in a shop or at a roadside vendor, sending money to a friend, etc. Adopting this mindset can result in a focus on developing payment services that are optimized for a subset of use cases and are less than optimal for the real lived financial life of the individual. Saying no more, I'll just move on. So why do we still have cash? And I say this, ask this because this is actually the real challenge that we have. Is cash in the economy that is the issue. It's not the huge numbers of digital payment systems, mobile money, etc. But why do we still have cash if we have all these other ways of paying for things? Well, for a start, it's interoperable. Everyone will accept cash. There's some marginal issues around some of the more industrialized countries, which are just emerging now. It doesn't require settlement. The recipient can use the cash they've received immediately. There isn't a 2-3 day clearing process. There are no transaction charges, at least that you can see. I can pay offline. It's anonymous, and you don't need to know who I am to take payment. Anyone can use it. No credentials or checks are required. And you always know your balance. So why don't we just stay with cash? Because there are lots of things wrong too. First of all, remote is difficult. In a connected world, it simply doesn't work. Sending money to someone remotely is risky and expensive. Making change is a horrible process, and it actually forces people to talk to each other as well. And it's not free, despite appearances. The economy pays for it. In seigniorage, in security vans, in sorting centres, ATMs, theft, there is a whole national infrastructure simply for handling cash. As a physical portable item is really easily stolen, and for large purchases, it's extremely It's extremely bulky. In fact, this bulkiness is an advantage when you consider crime. It's very hard to move large values of cash around. The cornflakes packet used to be the measure of the best currency for crime. How much can you pack into one? I remember it used to be something like $1 million, but now the €500 note has eclipsed that. And it's this physical element that makes it a problem in COVID times. The physical bulk of cash is one reason why governments are content that cash still exists, beyond the fact that they actually make money out of cash. Transaction anonymity is limited to lower value transactions simply because it's so bulky to move the cash around, and so the crime it facilitates is manageable. But move it electronic, and suddenly that anonymity kind of goes away. So what would an ideal alternative look like? Well, obviously it has to be interoperable. It has to be instant settlement. It has to allow face-to-face use, and that includes offline as well. So I have to be able to use it where there's no connectivity. It needs to be contactless, even though my daughter was telling me today that she was in a shop and people were touching the contactless terminal with both hands while they were trying to do a contactless transaction. You can't help some people. It also has to support online, remote use. Anonymous. Sorry, you don't get that. Once you remove all other friction and can do remote transactions at will to any value, your privacy rights evaporate because of crime. Also, see FATF and similar issues. It has to be very low cost, not just for the individual, for the company that's accepting the payments, for the economy as a whole. And it shouldn't be dependent on the technology that's held by the individual. So it shouldn't be requiring a smartphone or a contactless card or whatever it might be. It has to be secure. And most of all, from my perspective, it has to be available to everyone in the economy, particularly the underserved and the excluded. And I forgot to click my way through, but let's not worry about that. Interoperability then. One advantage that cash has always had is interoperability. When a country has multiple digital payment systems, but limited interoperability, then I can't be sure that when I enter a shop, my payment will be accepted. So beforehand, I visit an ATM and withdraw the necessary cash. And then when I go into the shop and find that my digital payment would be accepted after all, it doesn't matter, it's irrelevant. Since I have the cash, I may as well use it. So lack of interoperability is a strong reason for people not to move away from cash. And this is why I say interoperability is not a small technical concept. It has a very long pedigree. It goes right back to the origins of Visa and MasterCard. When they were launching, the commercial environment in the US was that lots of large shops had their individual payment systems. So again, there were islands of payment. And Visa came along as the Visa which joined all of these islands together, and the MasterCard which ruled all the others. But the problem is that interoperability is often implemented badly or not at all. And this results in payment islands. And I've seen this in some countries with Visa and MasterCard as well. If I have a Visa card from one bank, I know the rules say that it's available, that it will be accepted to all merchants, but unfortunately, that's not the case. The example I have here is Nepal, where that absolutely isn't the case. And early days of M-Pesa, where interoperability, there was lip service. Yes, we have interoperability, but it was actually provided by cash. So you could send money to an unregistered customer who would have to take it out in cash. And we call that interoperability. So global trends are leading us to a means of paying for things that is, from a customer's perspective, invisible, or as close to invisible as it can get while leaving them in control. We've seen a range of developments in recent years that take us closer to that ideal, but there's still work to be done, particularly in the area of interoperability, because without it, it's a significant brake on the economy. So how do the current offerings measure up? Well, nothing is perfect. Interoperability is an issue for many. Instant payments is a problem with payment cards. Face-to-face, most can do, one way or another. Remote is more of an issue. Low cost, no, don't think so, payment cards. Secure, yeah, most can do, but mobile money has real issues in that area, which I can go into later if you wish. And for my primary concern, available to the excluded, that is a standing issue on many of these payment methods. So how did we get to this point? Before I began working in financial inclusion and payments, as you heard earlier, in East Africa, I worked with banks and international payment systems in Europe. And I was astonished at the product design process. A bunch of prosperous white middle-aged men on the top floor of some tile block, pontificating on what financial services poor people need. They had no clue. They'd never met anyone poor. And this is partly what drove me into the financial inclusion field. The excluded in Europe have familiar problems. although, unlike many other places in the world, they can get bank accounts, they don't use them properly because they're designed for the middle classes. Take mandates. They're designed for people on a comfortable, regular income. If you're not one of those people, then you resort to payday lenders and similar to make sure mandates are met, because the penalties that banks impose on the underserved are crippling. And it'd be so easy to redesign the mandate system to make it inclusive using modern technologies. All that's required is for the banks to be willing to change. Or pensions or insurance products. None of these are developed with an understanding of the needs of the excluded. And this applies equally to the needs of someone living in Kibera or the slums of Glasgow's Govan. We can do it. We have the systems and technologies, and this community here understands the needs of the excluded. We should be thinking of the financially excluded everywhere in all of their myriad circumstances, because they're all remarkably similar. And we can't just focus on payments. And don't forget the authentication process. The scope for the payment, as I've said already, to fade into the background rather than being so prominent that I, as a customer, actually care how it's achieved. It's an inconvenience. I have to scan the QR code with my smartphone and enter a PIN or use a biometric or insert a payment card into a terminal or initiate a USSD session, whatever it might be. This would suggest that we should be striving to make the payment, and in particular the authentication step, disappear. One of the obstacles to achieving this is the need to prove with a reasonable degree of certainty that the person carrying out the transaction is the person authorized to do so, generally the owner of the funds. Achieving this will be led by developments in authentication, in particular ambient authentication, by which I mean a set of passive authentication mechanisms that largely go unnoticed by the customer, including behavioral biometrics around how the customer interacts with their mobile phone, types of transactions and their frequency, how they hold the device and for how long, etc., etc. Relying on a set of these allows for a very high degree of confidence, and doing it continuously so that when authentication is called for, the customer has already been authenticated and the transaction can just proceed automatically. In fact, contactless card payments, late in my career working with Visa, I actually worked on some of the software that goes into contactless cards. And they have already gone a long way towards this. The customer perception is that when you're using a contactless card, there's often no authentication. In fact, the card's chip contains sophisticated risk management software that learns the customer's purchasing habits and authorizes transactions that fall within its limits of acceptability. This extends to the payment terminals it meets as well. And what I found particularly interesting was that the first phrase, in the first milliseconds, the card and the terminal are deciding whether they trust each other and whether this is the real customer, which I think is quite fascinating. We can extend this further. So I no longer need to scan the code, etc. The payment is made from my preferred payment instrument, itself being selected according to what I've said I want to use for this particular type of purchase. And there's a whole load of other stuff that we can talk about that. And the whole cross DFSP account information, which can be achieved through a link between all those DFSPs, is to me particularly fascinating in understanding the customer. A short note on the emerging payment technologies. I know I'm going to overrun here. Let's go on quickly. Digital currencies. We've been talking about this in recent years to at great length, and to many people they are viewed as a future. To me, the definition is a currency that is not backed by a fiat currency held in a bank account. One of the earliest ones that I was involved with, albeit slightly tangentially, was Mondex in the UK, which isn't strictly a digital currency. This is, what, 28 years ago? It's backed by a fiat currency, but in a pooled account as opposed to individual accounts. So similar to the model used in M-Pesa. It's tied one-to-one with a fiat currency. You could view it as the original stable coin. It can be used face-to-face or or remote online transactions. You keep the eCash in a secure enclave, such as a smart card. And in order to exchange value, two secure enclaves need to talk to each other with nothing in between, preferably. Another example that I worked with that was DigiCash in 1990, which really sparked my interest in this, the ability to move money around the world extremely cheaply. But it died, so be it. And there's Bitcoin as well, which is obviously still very active. But more interesting, I think, now in the current environment are the central bank digital currencies, a digital currency which is actually a fiat currency, not backed by a fiat currency, it is fiat, by which I mean it is owned, operated by the issuer, the central bank. There are two major classes, wholesale or retail. Wholesale CBDCs being used for settlement between banks, which I think is interesting, but not our discussion today. And then there's retail. One of the first retail CBDCs I came across was the Canadian Mint, which was a derivation of Mondex, and it's entirely wallet-based. So again, two wallets can exchange value without any visibility from regulators or anyone else. And then currently, of course, we have Sweden's e-krona, which sparked a lot of the current interest in this. That's a blockchain-based solution. And Sweden's approach has been highly influential. And this picture is actually the Bank of England's model for what they think a CBDC should look like. But I'm conscious of time, so I'll move on. The other issue that is particularly interesting to me is identity-based payments. Why do we provide bank account details to payers? It shouldn't be about pay me. It's about it should be pay me, not pay my bank account. It's none of your business where I keep my money. And some have moved to pay me models already. Of course, there's UPI in India and NIBS in Nigeria with the BVN. And the Nigerian government saw immediate benefits when they mandated that you use the BVN model, the pay me model, for government salaries. All of a sudden, they found an awful lot of ghost accounts, which is interesting. All of these, though, are first generation. The second generation, which we haven't seen yet, is the extension of that to support different aliases, different identities derived from the main identity, but used for different purposes, which allows automatic routing and puts the customer in control, which for me is a driving force behind all of this. Then there's instant transactions, instant transfer of value from the payer to the payee. It may be real, or it may actually be smoke and mirrors. It doesn't matter. To the customer, the payer, and the payee, they get the funds straight away. It has a huge role in improving financial confidence in the underserved because they see the money transferred instantly, and it supports their budgeting as well, which has always been extremely valuable in cash. So again, this is another cash element that we really must embrace. And the effect on the retailer can be quite remarkable. A vast improvement in their liquidity. It improves their connections to wholesalers. It fuels a whole B2B e-commerce market, and thus contributes to the development of the local economy. Free retail transactions. If you charge for merchant transactions, you power the flight back to cash. Merchants won't pay a transaction charge, so they just pass it on to customers who immediately say, no, I'm paying cash. We can limit that by saying it's free up to a fixed volume, say $100 a week, and beyond that, a small fee. And we support small retailers with a business management app. Moving on. And there's a whole conversation to be had about richer financial services. But again, I'm conscious of time, so I'll move on. What's the relevance for Mojaloop is the key question for me here today. First of all, the Mojaloop context. Instant transactions and interoperability. Again, I keep coming back to interoperability. the Moduloop is not directly connected to the customers in payments, but Moduloop supports instant transactions, and we really should be pressuring the connected DFSPs to deliver that benefit to their customers. It's important, but it's not as important as the contribution to interoperability. And the reason for that is that Moduloop doesn't just switch money, it also switches business models. Interconnecting MFIs and banks is the most important element of the Moduloop proposition. It's not just about the MFIs, though. It's about the MFI's customers. This is financial inclusion. It's not giving people a wallet. It's interoperability. It's interconnecting everything together. It's the driver to an economy. So this is Moduloop's position in the future of payments. Moduloop can do all of these things, except where it is dependent on the connected DFSPs to deliver it to their customers. We can influence there, but we can't control. In retail payments, Moduloop can support all of the front-end technologies. You can see already demos of cards, mobile wallets, QR codes, etc., but it's not actually Moduloop itself, it's the partners. Moduloop's ALS, the account lookup service, already supports identity-based payments. The next generation is multiple aliases per person for different reasons. The Moduloop and CBDC's question is a little more nuanced, but it's potentially hugely significant for financial inclusion. We can support a number of implementation options through a Moduloop hub, and I'm actively watching and wanting Moduloop to be participating in all of the upcoming developments, and we'll be hearing more of that today. So thank you for that, and I apologize for romping through so quickly. It's through so much content, but I'm only a minute late, so thank you.
Thanks so much, Paul. Excellent presentation. There has been some interest in those slides, so we'll have all the slides up on the agenda at some point in time so that you can revisit some of those contents. There is a poll on your screen now. Please let us know what your thoughts were about that session. Once again, thank you so much, Paul.